Puppy Trades? I want to do a video analysis update on everyone's favorite topic, inflation. So I haven't been using the word inflation recently, I'll admit it. And there's a few reasons. The biggest one is that people think my views on inflation could be fundamentally or politically driven, which is certainly not the case. Two, the financial media has told retail investors that inflation is bad for growth stocks, which I think if you look at what happened in 2020, we'll all kind of realize that's a little silly. But besides the point, I do think that we need to use the word inflation because it is really the only way to get people to acknowledge that there is upside risk in the stock market. A lot of people really easily understand that there's downside risk, right? Everyone knows that a 1929 analog is going to get more clicks and more likes than, hey, we're going to trudge higher for a couple of months, okay? But it's really important to understand that if someone has been in cash for the past year, they haven't been sent a bill, right? No one's really given them a fine, but they have lost money if they have had no long exposure to equities in the past year in the form of inflation, okay? If your expenses get a lot higher, which we'll talk about, that's probably going to continue. Well, your employer's probably not going to give you, at best, more than a 5% raise, more than a 10% raise. And when we talk about some home building stocks, some energy stocks, some clothing and coffee stocks, we'll see that inflation could be going a lot quicker than a 5 or even 10% raise could compensate an employee for. So why are we talking about inflation right now? Well, there's a historical seasonal precedent to say that commodity prices do quite well in the winter and really just in the first half of the year. So this is the oil ETF XLE relative to the S&P 500 for the past year. We see a pretty clear trend from January to June, January to July, oil outperforms the market, then it starts to underperform. Okay, right around midsummer, the same thing happens to soybeans, where from January to June, January to July, right, soybeans do quite well, and then all of a sudden it tapers, well, I shouldn't use the word taper, but it goes down in the second half of the year. The exact same view is given with corn, where we do quite well in the first half of the year. It gets cold, right? Energy and all that stuff gets more expensive. And then midsummer, middle of the year starts to go down. The options market, once again, is letting us know that oil is going to have a big move this winter, okay? So let's just refresh. This is the iVolatility Advanced Ranker Sample. This is completely free. These stocks right here, these bottom 5 stocks, they have very cheap options, all else being equal, okay? So it's not really a good idea, all else being equal, to sell options on Occidental Petroleum or British Petroleum or Cleveland Cliffs because you're not really getting a lot of premium for it, okay? On the flip side, it's not really a good idea to buy any of these options up here because they have really expensive options, all else being equal, okay? So low implied volatility is never, ever enough to justify saying there will be an upside move in a certain stock. But this screener, very similar to the bar chart, straddle, and strangle screener, is filtering for the top 200 options volume. So all of these stocks that appear on the screener, which is completely free, if you go to iVolatility.com, not only do they have really cheap options, i.e. really cheap hedges, but we know that institutions are taking advantage of that in preparation for a large move. And when we look at the seasonality, we look at the Elliott wave, it's pretty clear, in my opinion, the move will most likely be to the upside, and it's probably going to be in the first quarter and the second quarter that a lot of this plays out. So the first thing we're going to do, we're going to talk about the evidence that there will be inflation. This is XLE. It's a wave 1 and an ABC wave 2, a huge wave 3, and a wave 4 that retests the wave 1 high. So this wave 4 ends at exactly the 38.2% retracement, and we form a wave 1 and a wave 2 between the 50 to 61.8% fib. So the stop is 48, the invalidation level is 45. Above these levels, I think oil, XLE, will rally to 68 for a wave 3 before a shallow wave 4 and a wave 5 higher. All in all, waves 1, 2, 3, 4, and 5 can take XLE to 76, 27% higher than the current price, and that could happen by June, by July, pretty conservatively, in my opinion. Here is soybeans. So some people are going to say, hey, Puppy Trades, I don't eat soybeans. Well, even if you eat meat, that meat is probably fed soybeans, and soybean oil is a pretty, close component of a lot of energy prices, soybean oil. I'm not a chemist, okay, but they use soybean oil in gas. Okay. Anyway, this is a wave 1 and an ABC wave 2 for soybeans. This is the ZS January contract. It's a little prettier on SOYB, the ETN from Ethereum, but this is a wave 1 and an ABC wave 2, that classic textbook bull flag for soybeans. Okay. So soybeans looks like right now it will hold above 1,181. Again, this is the January contract that I'm basing this off. This is a wave 1 and a wave 2. So if we hold this low of 1,181, the length of wave 1 placed at the wave 2 low can take soybeans to 1,828. On SOYB, the equivalent target is around 33. Okay, but anyway, for soybeans itself, this is a wave 1 and a wave 2. So if the wave 3 minimum target is hit, then soybeans can rise 34% in 2022. Now, I know what most of you are thinking, who cares about soybeans, okay? Soybeans are really going to be a big factor in a lot of oil prices, a lot of food prices, and the general picture for inflation says right now that big rally that a lot of commodities went on in 2020 and early into 2021 will be replicated at least once more. The length of this rally placed at this low says if the wave 2 low holds, soybeans can rise 34% in 2022. Home builders, very similar, very scary idea. That this is a wave 1 and a wave 2. This is a 1, 2, 3, 4, 5, wave 3, and a wave 4 that ended right around the 23.6% retracement. I think this is this classical bull flag right here. The classical traders, they're going to outperform the wave theorists. They're going to get rid of all this labeling and say this is the first leg of the bull flag. This is the sideways textbook consolidation. Now we've broken out and back tested the bull flag. So if we're above 71 to 70, then the length of this rally placed at this low will take the home building ETF to 126. That is 48% higher than the current levels. And guess what? Housing prices are probably going to be moving with it. Okay, so I'm not saying every house is going to be 48% higher than the current price. I'm saying that I think home builders, the ETF, will rise 48% in the next 12 to 14 months, so long as 69 to say 71 is not broken for the XHB ETF. Okay, are we scared yet? Okay, home building stock, KBH, looks really pretty. I like this a lot, especially since Home Depot and Lowe's formed this exact same high in May. I think this is a wave 1 and a wave 2. This is a 1, 2, 3, 4, 5, another wave 1, and an ABC correction wave 2 at the 61.8% retracement. So a nice stop would be 35. Above 35, the length of wave 1 placed at the wave 2 low can take KBH home builders to 60 before a shallow wave 4 and a wave 5 higher. For time, this is from November to May, right? The seasonality again looks like it'll play out, November to May, November to June. We can see KBH hit 60 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high, the length of wave 1 placed at the wave 4 low can take a wave 5 higher to 74. Again, very similar to XHB, much higher prices for home building stocks will probably lead to much higher prices for homes in general. Here's Farmer Brothers Coffee. Oh no, I didn't like this one. But it's important to realize this is a coffee supplier, okay? So coffee itself probably won't go up by this much of a percentage, but this is a large coffee supplier. They supply coffee to a lot of restaurants, a lot of hotels, and this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. This hurt because this is between the 61.8 and 78.6% retracement of a clear 1, 2, 3, 4, 5 waves impulse. So if we hold above 5.47, the length of wave 1 placed at the wave 2 low can take Farmer Brothers Coffee, a coffee supplier, to 15 for a minimum wave 3 target. Oh no. Before a shallow wave 4 that retests the wave 1 high and the length of wave 1 placed at the wave 4 low says that Farmer Brothers Coffee can triple. Okay, this company doesn't make iPhones. This isn't Zoom. Okay, this is a company that supplies coffee. It could double, it could triple in 2022. I'm in it for the long haul. If it's above 5.47, better buy all that coffee now. I know I am. I'm hoarding coffee. I got a whole room full of coffee right now. Here's Exxon Mobil. Now we're going to get into the individual names that I like a lot. We'll start with oil. Wave 1, Wave 2, big Wave 3, and a Wave 4 that ends between the 38.2 and 50% retracement. So I believe this is a Wave 1 and a Wave 2 that ended between the 50 and 61.8% fib. So the Wave 3 target is the 161.8% extension, which is 75 before a shallow Wave 4 and a Wave 5 higher. The length of Wave 1 placed at the Wave 4 low gives a minimum Wave 5 target of 76. The length of Wave 3 placed at the Wave 4 low gives what I think could be a more accurate Wave 5 target of 85. That could be hit into the second quarter, into the summer. Here is a kind of longer term view that I want to talk about. This is really kind of the only long-term view for oil, but let's talk about the long-term view for Exxon Mobil because it's, a pretty important stock for the oil sector. We'll go to the max, the all-time chart. So I think it's pretty clear. This is a 1, 2, 3, 4, 5 Wave 1 for Exxon Mobil. This is an ABC Wave 2. So this is Wave 1 of a large Wave 3. This is Wave 2 of a large Wave 3. But the bottom line, the moral of the story is that this whole rally, this, 2-3 decade long rally could have just been a Wave 1 in the kind of bigger picture for ExxonMobil. This ABC correction may have put in a generational low for the oil sector. That means that ExxonMobil in the bigger picture breaking to new all-time highs, going above 104, that's not really an outlandish thing. That's actually a very conservative expectation in the bigger picture. Here is PBR. This is Petrobras. It's a little hard to pronounce, but this is a 1, 2, 3, 4, 5 Wave 1 and an ABC Wave 2 for PBR. I think this is another Wave 1 and another Wave 2. So kind of similar to ExxonMobil. I don't want to say the price target is 80, right? But this could have all been a Wave 1, and this could be an ABC correction Wave 2, ending a generational correction for PBR. And right, it's the same view with Boeing, it's the same view with American Airlines, it's the same view with ExxonMobil and Chevron, that this could be a generational low that we put in March of 2020. So from this low in 2016, I think this is a Wave 1 and a Wave 2. The 161.8% extension of Wave 1 says a pretty conservative, small degree Wave 3 target for this oil stock is 27, nearly triple the current price. I think that's a long-term idea. Especially this bigger count is much more long-term, obviously. But I just wanted to show 1, 2, 3, 4, 5 Wave 1, ABC Wave 2, and there's a lot of oil stocks where it says we could see oil and gas get substantially higher, right? They're not going to force us into clean energy. We're going to beg for clean energy because we're not going to be able to afford gas, all right? That's what it looks like. Here is Occidental Petroleum. Ooh, man. So what's the thing about Oxy? What's kind of the elephant in the room? Well, XLE and ExxonMobil, they form a Wave 1 and they don't break the March 2020 low. So on ExxonMobil and XLE, I can count this as a Wave 1 and a Wave 2. For some oil stocks like British Petroleum and Oxy, we break below this low. That means I can't count this as a Wave 1 and a Wave 2. So this is possibly a more bullish, if oil really starts to run away, Oxy might show what a kind of uber bullish view of oil could be that a lot of people don't really want to think about as a possibility, okay? But this could be a 1, 2, 3, 4, 5 Wave 1 and a Wave 2. So very important in validation level. If Oxy is above 21, with 24 being very tight, I think this is another Wave 1 and another Wave 2. So the length of Wave 1 placed at the Wave 2 low gives a minimum target of 40 to 44 for this Wave 3. And this is just a small degree Wave 3. So I think in the second quarter, Oxy will hold 24. Certainly it'll hold 21. And it'll go into the 40s this spring, very conservatively into June and July, right? And that lines up with a lot of what we're seeing. And we can see that if they're buying a bunch of options on Oxy right now, they're probably playing a big move to the upside. Denison Mines is a uranium stock. Very similar idea. Very similar. 1, 2, 3, 4, 5 Wave 1. ABC Wave 2 for Denison Mines. So a nice stop is 1.17. The invalidation level is 0.91. I think the length of this 1, 2, 3, 4, 5 waves impulse placed at this low will give a minimum Wave 3 target of 2.50 for Denison Mines. And that's just a minimum Wave 3 target that would be nearly a, close to 100% gain, right? Realistically, Wave 3 would be the 161.8% extension of Wave 1. we'd have a shallow wave 4 and a wave 5 higher. So uranium stock could double. And when we look at uranium fuels, it's a very similar idea that this sector could do really well. So I actually bought uranium fuels right here based on the length of wave A, place of the wave B high being where wave C ended. So I took a full position in uranium fuels right around here. And I actually sold half at the tippy top. And I'm still holding the other half, but this is a 1, 2, 3, 4, 5 wave 1 for U. This is an A, B, C correction wave 2. And I think just like Denison Mines, this is another wave 1 and another wave 2. So if uranium fuels is above 5.84, the length of wave 1, place of the wave 2 low with Denison Mines can take uranium fuels to 13. That is almost 100% return. And just like Denison Mines, realistically, wave 3 would be the 161.8% extension of wave 1. We'd have a shallow wave 4 and a wave 5 higher. So uranium fuels, Denison Mines, Occidental Petroleum, right? It's kind of a holistic view that energy prices could get very expensive. So I'm not sure how to hoard oil, but I'll figure it out. Okay, oil could be very lucrative in the future. Here is Boeing. We talk about Boeing a lot. I'm the boy who cried Boeing, but I give blue chips and I give monopolies special treatment, and I think we'll see quite clearly why they're making Boeing very difficult. On the all-time chart from 2003, this is a 1, 2, 3, 4, 5 wave 1. This is an A, B, C correction wave 2, and on the smaller degree, this looks like another wave 1 and another wave 2. And again, another wave 1, another wave 2. So obviously jet fuel is going to be a lot more expensive. If fuel is a lot more expensive, the financial media will tell you this is bad for Boeing. The charts say it's not. This is a wave 1 and a wave 2. We'll hold the 78.6% fib of 170 and go on a wave 3 higher to 363 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low can take Boeing all in all to 438. So I'm the boy who cried Boeing, but I think there's clearly a pattern where Occidental Petroleum, Exxon Mobil, XLE, uranium fuels goes a lot higher. And I think what happened was they were the leaders in the industrial kind of energy sector. Now, the next time they take a leg higher, we'll see Boeing, we'll see American Airlines do quite well. So I think we hold 170, start going to 363 before a shallow wave 4 and a wave 5 higher. Ideally, this will happen while Occidental Petroleum, while Exxon Mobil, while XLE, and Denison Mines and uranium fuels are going much higher too, as well as American Airlines. So very similar idea on the all-time chart. 1, 2, 3, 4, 5, wave 1, ABC correction, wave 2. So this is kind of the idea that it's not just one stock, right? It's not just JetBlue. It's not just Boeing. It's the entire transportation sector that could be at a generational low. An opportunity like that isn't going to be made easy. And we can see the minimum expectation for American Airlines is that it's going to get into the 60s. And that's, way higher than the current price, okay? And that would be a minimum expectation. So obviously the better opportunities are going to be made more difficult. This is a wave 1 and a wave 2. I think for AAL, this is another wave 1 and another wave 2. Is there anything good about me being completely wrong about the airlines this summer? Yes, I was looking for a wave 4 correction from this high and a wimpy wave 5 higher. What's happened is that we've gone A, B, C all the way down to the 61.8% fib. That means I can't count this 1, 2, 3, 4. It can only be counted, in my opinion, 1, 2, 1, 2. The length of wave 1 placed at the wave 2 low says American Airlines can go to 31 before a shallow wave 4 and a wave 5 higher. So ideally, like Boeing, that will happen while Oxy and while Exxon Mobil and Denison Mines and uranium fuels and XLE take another thrust higher into the spring. But I am the boy who cried Boeing, so I'm going to give them more, time. But let's look at gold. Let's look at silver. I think gold and silver are really interesting. They're a wave 1 and a WXY wave 2. So normally I would just count this as an ABC correction. A lot of purists in Elliott Wave, don't like that I would just count this as an ABC correction, but this is technically a WXY, WABCX. The length of wave W placed at the wave X high is where wave Y ended. So I typically will call something a WXY if the connector wave X, is a clear expanded flat, okay? That's all a bunch of jargon. All that matters is that this is a wave 1 and a wave 2 at the 61.8% fib, and gold hasn't broken this wave 2 low. So I know GLD, we're not really too excited about GLD, but if we're above 157, who says this isn't another wave 1 and another wave 2? And the wave 3 minimum target, really kind of a short-term wave 3 minimum target, is 192 just in the short term. We'd have a shallow wave 4 and a wave 5 higher. That would break this high from August of 2020. So if this is wave 1 and wave 2, a break above this high would confirm at minimum a wave 3 in progress for gold, GLD, to 215. I think on the smaller degree, this is another wave 1 and another wave 2. So GLD will hold 157 and go much higher. So it's actually a pretty nice risk reward because that wave 2 low looks important. If we're above 157, this is wave 1 and wave 2. The 161.8% extension is 192 before a shallow wave 4 and a wave 5 higher for GLD. We could see a new all-time high in 2022. Here is silver. Okay, I know everyone's not too happy with silver, but they were never going to make silver easy. Remember that trading is all about risk reward, okay? What is the risk, realistically, that silver goes to zero? What is the risk, realistically, that gold loses 75% of its value? Pretty low, right? Especially compared to a lot of other stocks where we could possibly see, over 100%, over a 200% gain in the future. So SLV and gold and a lot of these value names, I like them because they're stores of value in a way, and I can take larger position sizes. So a lot of my biggest winners in 2021 were value stocks like Pfizer and uranium fuels, where I could take bigger positions and not really worry about them going to zero. So this is a wave 1 and an ABC wave 2. This is another wave 1 and another wave 2, ending between the 50 to 61.8% fib. So it's a little tight to use the 61.8% fib as a wave 2 stop, but I think that SLV will hold above 17 and it will go on a wave 3 higher to 38. I'm not quite sure that will happen in 2022. I think optimistically it will happen in mid to late 2022, that if this is wave 1 and this is wave 2, if we begin wave 3, remember that wave 3 is bigger, stronger, and faster than the length of wave 1. Okay, so wave 3 is going to be something we all notice, right? Remember when, we had that crazy, bonanza, where they said Redditors were moving the cost of silver. I think it could be very similar, but it certainly won't be Redditors doing it. This is a wave 1 and an ABC wave 2. What we just talk about for PBR, what we just talk about for a lot of the oil stocks, this could be a decade-long accumulation pattern. Okay, could be a generational low for silver. This is a wave 1 and a wave 2. The 161.8% extension is 38 before shallow wave 4 and a wave 5 higher. One thing I'll point out about gold and silver is that their rallies in the summer of 2020 coincided with a lot of growth stocks like Zoom, like Salesforce. So I'm not quite sure I buy into the narrative that inflation would be bad for growth stocks. I think that's something the financial media just put in your ear. But this is a wave 1 and a wave 2. If we're above 17, silver can hit 38 before a shallow wave 4 and a wave 5 higher. There are other silver kind of related stocks that I like. Here's Wheaton Precious Metals. It looks pretty. This is a nice, long-term idea. Wave 1, ABC wave 2, another wave 1 and another wave 2, and yes, another wave 1 and another wave 2. So conservatively, this is a wave 3 and a wave 4 that retested the wave 1 high. So 34 is a nice stop. I'll use this wave 1 high of 31 as an invalidation. I think Wheaton Precious Metals holds both of them and proves this is a wave 1 and a wave 2. This is a wave 3. So the length of wave 3 placed at the wave 4 low can take Wheaton Precious Metals to 73. And that would end this blue wave 3 within the cycle from this low. I think ultimately a really cool, useful gauge for silver and gold will be to take the beginning of wave 1 connected with the high of wave 1 and the low of wave 2. The next time Wheaton Precious Metals gets to the median of this Andrews pitchfork, we could see pretty substantial profit taking in that regard. So Wheaton Precious Metals looks good. Here's the Palladium ETF PALL. It got a little scary. It got very close to this low and then had a very swift reversal. Nice wick on the weekly chart. Remember that in the ETF report from Aberdeen Investment Funds, it says that palladium, because it's a very industrial metal, has a positive correlation with economic activity. So a lot of people don't really see how we could have a robust economy in the future, but palladium shows that we will. So that doesn't necessarily mean that it's going to be good for the bourgeoisie or the middle class, but palladium does kind of show that we could see a substantial economic boom, kind of in line with the roaring 20s idea. But anyway, this is a 1, 2, 3, 4, 5 wave 1 for palladium and an ABC correction wave 2. Nice, beautiful wick at the 78.6% retracement. They didn't make it easy, but this is a rock, right? Remember that rocks, they're not going to make rocks easy. Okay, if we're above 143 to 137, the length of wave 1 placed at the wave 2 low can, in a long time, take PALL to 286. And that would be, yes, a minimum wave 3 target. We'd have a shallow wave 4 before a wave 5 higher. So very interesting opportunity for palladium, right? We can't really function as a society without palladium. So we're above 137 to 143. I think palladium will go make new highs in 2022. Later in the 2022, the length of wave 1 placed at the wave 2 low can take palladium all the way to 286. I don't believe this has options even. So for time, I'm really just kind of focused on the long-term idea that we'll see a economic recovery and a very high level of inflation, likely correlating with palladium going to 286. Here is another stock that I like. This is Rio Tinto Mines. So this isn't just in gold. It isn't just in silver. They have a few other, I think they do iron, they do copper. I think they even do a little bit of uranium, but this is a wave 1 and an ABC wave 2 for Rio. This is the American version, ADR, a wave 1 and a wave 2, another wave 1 and another wave 2 that sees the length of wave 1 placed at the wave 2 low can take Rio Tinto to 118. So the textbook wave 3 target is the 161.8% extension of wave 1, which is 133. The length of wave 1 placed at the wave 2 low lines up very beautifully with Rio going to the median of this Andrews pitchfork in the longer term cycle. So I like the 61.8% fib. 58 is a tight stop. The wider invalidation level would be 48. The length of wave 1 placed at the wave 2 low says Rio, which pays a nice dividend, is going to go the length of wave 1 placed at the wave 2 low to 118 to 133, and that would just be a wave 3 target. We'd have sideways consolidation for wave 4 before a wave 5 higher. So I think one thing that is interesting to think about is that a lot of the dividend stocks recently have done quite well. I could see sector rotation into the mining side of the dividend sector. It's no accident that Pfizer and Procter & Gamble did really well in this quarter. They'll give you a fundamental reason, no question, but I think that we're going to see dividend stocks get some money from Pfizer and Procter & Gamble in the first half of 2022. Even in the longer term idea, the length of wave 1 placed at the wave 2 low says this could pay a pretty dividend all the way into the 120s, all the way even to new all-time highs. So Rio is a really interesting opportunity. Let's talk about some clothes, right? We all got to wear clothes. Even people from Austin have to wear clothes. This is an ABC correction. And this is a wave 1 and an ABC wave 2 for Nike that ends at the 61.8% fib. So the larger degree count for the purposes of right now doesn't really matter. All that matters is that this is a wave 1 and an ABC wave 2 that ends between the 61.8 to 78.6% fib. So I think Nike will hold 151. I really think it holds 155 and goes the length of wave 1 placed at the wave 2 low. That can take Nike to 190 before a shallow wave 4 and a wave 5 higher. For time, this is from September to November, right? So this is less than a month that Nike goes on a wave 1. If wave 3 is bigger, stronger, and faster than wave 1, it could be very quick. I'm not saying it's going to be a month, but we could see in the first quarter, the second quarter, more conservatively, Nike is in the 190s before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low, if wave 4 retests the wave 1 high, would give a conservative wave 5 target of 214, I think, this summer for Nike. So clothes could get really expensive. Unilever kind of echoes this theme that consumer products could be very expensive. And I think a lot of people, when they think inflation, right, they just want to go buy a bunch of bricks of gold. There are better, maybe more savvy ways to play inflation. And I think a lot of them are in the consumer sector. Rio and Unilever both pay nice dividends. This is a 1, 2, 3, 4, 5 wave 1 for UL in an ABC correction where the length of wave A placed at the wave B high. Looks like it's where wave C is ending. We got the theme of commodities, clothes, a lot of things doing a lot more bullish in the first and second quarter. I think Unilever will go the length of wave 1 placed at the wave 2 low. I'm not sure it'll happen by this spring, but the next target for UL is 70 before a shallow wave 4 and a wave 5 higher, and it'll pay a dividend along the way. So this is a pretty cool opportunity. I think it holds above 48. That's a little tight, but I think with the low beta of Unilever, it's pretty acceptable. The length of wave 1 placed at the wave 2 low says UL is going to go all the way to 70 before a shallow wave 4 and a wave 5 higher. I think it sees 70 in mid 2022, more conservatively late 2022, and that would just be a wave 3 target. We'd have a shallow wave 4 before a wave 5 higher. Here is Walmart. Walmart, pretty interesting opportunity. I think it'll follow Procter & Gamble. These charts look identical. 1, 2, 3, 4, 5, wave 1. Procter & Gamble and Walmart both make this exact same wave 1 high in late November, early December of 2020, then have this exact same wave 2 low in March of 2021. Procter & Gamble is already above this high. I think Walmart is next. They're both huge holdings of XLP. This is a wave 1 and a wave 2 that ends at the 61.8% fib. I think Walmart will hold 131. It will go the length of wave 1 placed at the wave 2 low all the way to 160 before a shallow wave 4 and a wave 5 higher. I think that 160 can be seen this spring before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low can take Walmart all the way to 178. And yes, like Unilever, like Rio, pay a dividend along the way. Here's Camping World. Camping World might be getting ready to go. I like this a lot. I love the CEO. The CEO buys Camping World like he's running out of style. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2 that ends at the 50 to 61.8% fib. I think that Camping World CWH holds above 32. The length of wave 1 placed at the wave 2 low can take Camping World all the way to 61 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low. If wave 5 is the length of wave 1, can give a target down the road of 75, even 80 for Camping World. So I love Camping World. I think it holds above 32 in the length of wave 1 placed at the wave 2 low. Kind of similar to Boeing, where we're going to see more expensive parts, kind of more expensive, things because of shortages actually lead in an increase in price for a lot of these stocks. Remember, they told us that the chip shortage was bearish for Qualcomm, and it was bearish for Micron, but the charts kind of said otherwise. So I think it's going to be a very similar thing where they tell us that inflation and rising fuel prices is bad for Boeing, it's bad for Camping World, but in reality, I think it's going to lead to an increase in the stock price. This is a wave 1 and a wave 2, so the next target for Camping World is 61 before a shallow wave 4 and a wave 5 higher. Camping World looks good. Here is AstraZeneca. I want to get a pharmaceutical company. Remember, inflation can be played many ways, and I played inflation a lot with Pfizer in 2021. I think a big mistake that a lot of kind of inflation bulls make is that they think gold and silver is the only way to play inflation. Okay, that's very dangerous. But I think the length of wave 1 placed at the wave 2 low for AstraZeneca really has a very similar idea with Pfizer coming into 2021, that this can go all the way to 75 for a minimum wave 3 target on the larger degree. Now, from this low, I think this is a wave 1 and a wave 2 that ends between the 50 to 61.8% fib. The length of wave 1 placed at the wave 2 low can take AstraZeneca in the smaller degree to 71 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is at least the length of wave 1 placed at the wave 4 low, then AstraZeneca can go into the 80s and yes, pay a dividend along the way. So 53 would be extremely tight. 50, the 78.6% fib, is a more realistic stop. I think the length of wave 1 placed at the wave 2 low takes AZN to the 70s before a shallow wave 4 and a wave 5 higher into the 80s, paying a dividend along the way. Here's Intel. Intel, a chip company. I think that, especially after 2021, we've all got to realize that the chip shortage is a great way to play inflation. Intel and Taiwan semis really have a lot of neighbors like Qualcomm, like Micron, like AMD, like Nvidia, that says that we should really pay attention to laggards in the semiconductor sector. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. It's just like the winner of last year was the exact same thing. We thought Micron and Intel were losers, right? Then all of a sudden they're on the bar chart, straddle and strangle screener. The quarter switches and all of a sudden Intel isn't so bad anymore. I think it's going to be very similar. 1, 2, 3, 4, 5 wave 1. ABC wave 2 that ends at the 78.6% fib. The length of wave 1 placed at the wave 2 low can take Intel into the 70s before a shallow wave 4 and a wave 5 higher. So the only really realistic stop right now is the beginning of wave 1, which is also the invalidation level of 43.61. I think both of them hold, and I think Intel is a sleeping giant. in the semiconductor sector. Another sleeping giant that is a little more of an uptrend idea is Taiwan Semiconductors. This chart looks identical to Qualcomm. I mean, really, I don't think that that's a Rorschach test. This really does look identical to Qualcomm. It even kind of looks similar to Micron. And we saw Micron and Qualcomm both in the fourth quarter have explosive base breakouts. So what is a base breakout? That's when institutions accumulate a stock very quietly for a couple of quarters, and then once the quarter switches, they're ready to start taking profits and putting those gains on their report card. This is a wave 1 and a wave 2. This is a huge wave 3 and a wave 4 that ended between the 23.6 to 38.2% fib. So I think TSM holds above 104 very quickly. I'm expecting this stock will have high volume and explode above this wave 3 high. This is the left side of the base. This is the right side of the base. The length of wave 3 placed at the wave 4 low is the exact same setup that will take Qualcomm to 232 and Micron to 121. I think it will take Taiwan Semis to 208. So this is building up energy for a huge move. I think it'll take some time, but I think into the middle of the year, later in the summer, we'll see that Taiwan Semis is in the 200s. And if this gets going, it'll be going pretty quickly, all right? We saw how quickly Micron and Qualcomm went from slow to fast, okay? This can go from 0 to 100 real quick. Real quick, okay? Here is PayPal, here's Squarecash. I think eCash is a very savvy way to play inflation, and I think this is another good example of how, wait a minute, I'm not sure inflation is going to be bad for growth stocks. Didn't the eCash sector with Bitcoin and crypto rally with oil in the winter of 2021? It did. So I think this is a wave 1 and a wave 2. And I think eCash is ready to rally with a lot of things that we normally associate with inflation, like oil, like uranium, like clothing prices. This is PayPal, wave 1, ABC wave 2, ending between the 50 to 61.8% fib. So in the same way that Bitcoin is kind of seen as a inflation hedge, I think that eCash stocks in general, like PayPal and Squarecash, are going to end up being very similar to crypto. This is a wave 1 and a wave 2. So pretty tight for PayPal. I want to see 169 not get broken. And below that, there's a little bit of room to the 78.6% fib. So I don't think that PayPal will go below 169. I think this is wave 1 and this is wave 2. So this is all between, this is about a year and a half that this entire rally takes place. So the length of wave 1 placed at the wave 2 low, very similar to Squarecash, says that this could be a pretty incredible opportunity. One thing that I'd like to point out is that, stocks in the e-commerce sector, like Amazon and like MasterCard, they lost 50, 60% of their value in 2008. Okay, it is not uncommon at all for a growth stock to have a pullback that we've seen PayPal and Squarecash have in 2022 and 2021. And to be quite honest, if Squarecash and PayPal did bottom right here, then the market makers honestly made it pretty easy compared to what they made Amazon bulls and MasterCard bulls go through in 2008. I think we hold above 169, and I think we're going to go fill out the left side of the base. The right side of the base is going to show that this is retail margin capitulation. The length of wave 1 placed at the wave 2 low says pretty soon into 2022, we'll see a rally into new highs. The length of wave 1 placed at the wave 2 low says PayPal can go all the way to the 400s for a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. But just the minimum wave 3 target is an over 100% gain. Okay, so if we're above the 61.8% fib of 169, there's incredible risk reward opportunity with PayPal and with Squarecash. Here's Square, or I guess I should call it Block, or I guess it's Square again. I don't know. They change their name so often. But anyway, wave 1, ABC wave 2. This is another wave 1 and another ABC wave 2. Right at the 50% fib. If we're above the 61.8% retracement, I think that this is a really nice risk reward opportunity. I think Squarecash will hold above 130, go the length of wave 1 placed at the wave 2 low. That would be a minimum wave 3 target of 413. So PayPal and Squarecash both could, in a conservative wave count, double. And that would just be a minimum wave 3 target. So we can see why they might be making these stocks pretty difficult. I think SQ holds above 130. I think PayPal holds above 169. They go the length of wave 1 placed at the wave 2 low. And I think that both of these stocks will rally with Bitcoin, with Ethereum, and with Ripple You know, Ripple, I know we make fun of Ripple, but Ripple's going to do well, guys. Okay, this is a wave 1 and a wave 2 for Bitcoin. This is another wave 1 and another ABC wave 2 for Bitcoin. So the 78.6% fib to 61.8% retracement is where Bitcoin is right now. Okay, the length of wave 1 placed at the wave 2 low says we could end wave 2 and go on a wave 3 higher to 74,000 for a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low says Bitcoin's path to 98,000, 97,000 is right in front of us, and there's a pretty nice invalidation level right now. Honestly, 39.7K, that's pretty important. That would disprove that this is a wave 1 and a wave 2 if we broke below that. So I'm using the bar chart candles. I know that different crypto exchanges can have different numbers. I'm going to use bar chart BTC USD. If Bitcoin is above 39.7K, the length of wave 1 placed at the wave 2 low can take it to 74,000 before a shallow wave 4 and a wave 5 higher. Here is Ethereum. Ethereum is beautiful. It's beautiful because it's not even close to invalidating what we just talked about with Bitcoin, where this is a 1, 2, 3, 4, 5 wave 1. Wait a minute. Isn't that right when the quarter ended? And isn't this right when the quarter ended? And isn't this, never mind, but this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 that ended between the 50 to 61.8% fib. And this is another wave 1 and another ABC wave 2. So the length of wave 1 placed at the wave 2 low can take Ethereum to 5,800. And that is a minimum wave 3 target on a small degree. Then we have a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high, the length of wave 5 will be at least the length of wave 1 placed at the wave 4 low. That can take Ethereum to that big round number of 7,000, and that would just end this red wave 3 within the cycle from the June low. So 3.1K is a nice stop. The closer we get to it, the more I like it, but I don't think that this kind of sell off, this mini baby dip is going to last much longer. I think we're going to get going. This is a wave 1 and a wave 2. I think we hold above 3.1K and go the length of wave 1 placed at the wave 2 low all the way to 5,800. That would be a minimum wave 3 target. We'd have a shallow wave 4 and a wave 5 higher. I think Bitcoin and Ethereum are really going to get going, into the first quarter, especially if we start seeing, a lot of the inflationary stocks that we talked about at the beginning of this video have that winter rally. Here's Ripple, wave 1, wave 2. Ethereum, Litecoin, and Bitcoin are all way, or at least have at some point gone way above this high. Okay, that doesn't guarantee that Ripple's going to follow, but this isn't the laggard that you think it is. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. And let's look at this Andrews pitchfork for a second. If we connect the beginning of wave 1 with the high of wave 1 and the low of wave 2, uncanny, gorgeous reaction on the median of the pitchfork. Then puppy trades, pitchforks don't work, boom. Gorgeous reaction on the lower bound. Puppy trades, pitchforks still don't work, boom. Another wave 1 and a wave 2. Guess where I think we're going? I think this is another wave 1 and another wave 2. I think Ripple will hold above 55 cents and go all the way to $3 before a shallow wave 4 and a wave 5 higher. That's all on the small degree. I think ultimately Ripple will hold above 55 cents, go to the lower bound of the pitchfork, go to the median of the pitchfork, and then it's use your imagination time after that. But I think eventually we get to the median of the pitchfork. That could be $3, $4, $5. So they're making Ripple difficult. They even took it off the exchanges. But I think we all know why. It's going to hold above 55 cents. It's going to be heading into the $3, $4, $5 range in 2022.